Hey everybody, happy Friday. Andy Tuttle here with the Tuttle Group at Cross Country. I wanted to wait until the inflation numbers came out yesterday to get this market update out because, wanted to see what those numbers were really going to look like. Everybody, of course, talking about the CPI, the Consumer Price Inflation Index, yesterday, which did rise at 0.4%, double what they thought. And that was a big number. But the real news was on the core inflation, stripping out food and energy, and that rose as well. And in the last 3 months, it's gone up from 5.9 to 6.6. Now, we're not going to get into the graphs or anything, but we knew this was coming because of some really low months of inflation a little over a year ago that fell off. So the calculation automatically increased. That really did obviously spook the markets. That 1 point rates had spiked up 3/8%, and it settled back down, and bonds trying to turn the corner. Some things helping that are that UK, the gilt, they're equal to our Treasury, has they've decided to stop their purchasing program, and some of that money flowing out of that into the bond markets, causing a little bit of hopefully some stabilization. But the bottom line is, hey, as inflation continues to rise and these numbers are high, you're going to see interest rates still be in a higher position. However, still a great time to buy if you're a buyer. Really, it's everything is better for a buyer right now, except for the rates, and we understand that. It's sellers are more flexible, negotiating price, seller concessions, close times, those kinds of things. You are in a good position to go out there and not have to bid way over list for most of these properties, right? So all of that is good news. But what do we do while we're waiting for rates to come down? Well, there's a couple of programs we want to talk about. I put a link to the 2-1 buy down program we discussed last week as well. But I think that's really the best loan product to be looking at right now because it allows you to get a lower rate for the first couple of years while we wait for interest rates to come back down. And again, historically, when we look at the chart since 1982, every time we're in a position like we're at now in the market, within 2 to 3 years, rates drop 1.5 to 3 points. So this kind of is a bridge to those normal cycles that happen. And another thing I want to share with you is the lock and shop program. There's some details in the description in the email, depending on where you're watching this. And that just allows you, with some parameters around it, to, if you're really hot and know you're going to be getting a property, to lock before you get a contract and float down if rates do see a big drop before you close. So those are some ways that we are want to try to protect you on that, right? Whether you're a buyer or a seller, it's good to know these tools to help market your property as a seller or to help arm you as a buyer. So hope this is helpful information for you. If you're unfamiliar with those programs, want to talk about it more, please give us a call. We're here for you. We know it's crazy out there, but it is still a wonderful time to be out there doing what you're doing and looking in this market and seeing the opportunities. And we want to be able to help you capitalize on them. So have a great weekend. Appreciate you. And we'll talk to you soon.